so in love with you.
Welcome back to Real Estate Mindset. Today's video is going to be absolutely bonkers. Now, I'm starting to think that I'm going to get the deal of a lifetime actually from new home builders. As demand continues to get crippled, it's going to cause new home builders to continue to overbuild. As new builders and new home builders continue to overbuild, that's going to put more pressure on them to start giving us buyers incentives and dropping the listing prices of those homes to prevent them from going out of business. And y'all can mark my words on that, because just like us, home builders have also been whiplashed and rug pulled. So my eyes are now on these new home builders. And what we're going to do is take a look at one of the biggest home builders in America, Lennar, and look at all of the price drops that they have already begun in order to get ahead of what they already know is coming. So I want you guys to know what's coming as well. Now we're going to jump into an article right now from Yahoo titled Lennar starts cutting prices and cooling U.S. housing market. So obviously Lennar already sees it coming. They see the transition out of a seller's market back into a buyer's market. So it's super refreshing to see that these trends are finally starting to make significant changes in the housing market. But not all metro areas are equal. So stay patient. In my metro areas, I'm seeing it. And it took about two months for me to start seeing it. So what I'm saying is be patient, look to the nation, see what's happening around the nation. It's going to come to your city as well. No city is going to be immune to a crash or a recession. Now, remember, you guys, I'm not a financial advisor. My bio is realtor, loan officer, instructor in real estate. So I love real estate, but I'm a YouTuber working hard to try to get you guys a video a day. So please, for my effort, like this video, subscribe if you haven't already. And please, guys, comment. I love your intel. I love your insights. Let's get started on this article right now. Okay, guys, Lennar Corp has started trimming prices and offering buyer incentives in some areas of the U.S. to bolster sales in a cooling housing market. So here's the thing. Like I'm saying, you guys, in some metro areas, it is changing rapidly. In others, it's not. So Lennar has already preemptively started offering buyers incentives in some metro areas. Y'all remember me always saying buyers incentives are amazing, right? It continues. Rapidly rising mortgage rates and economic headwinds have depressed new orders, and buyer traffic in June has increased deal cancellations, the builder said on a call with analysts on Tuesday. So now, you guys, we're starting to get reports from new builders that they are getting massive waves of contract cancellations that are now directly impacting their profitability substantially. So the wave of canceled contracts has begun, and the wave of canceled contracts for new builds is only going to get worse as we go on to 2022. The reason is skyrocketing interest rates. People can no longer even qualify, or they don't even want to pay those ridiculous prices. There's a bunch of reasons why people are canceling. It is what it is. It's just going to get worse as we go into this year. Let's get on with this article right now. For now, Lennar is sticking to its earlier forecast for deliveries of about 68,000 homes in its full fiscal year. The catch is that with demand now starting to wane after the pandemic boom, current attempts at guidance are guessing and not guiding, Executive Chairman Mr. Miller said in the company's earnings statements. He warned about a slowdown already underway, calling it a complicated moment in the market. You can say that again. Shares of the Miami-based builder rose after it beat expectations for orders and profit margins in the quarter through May, a period when buyers were still rushing to lock in deals, but the weight of the rapidly doubling of interest rates over 6 months, together with accelerated price appreciation, began to drive buyers in many markets to pause and reconsider, Miller said in the statement. We began to see these effects after quarter end. 7 regions had significant slowdowns this month, Lennar said. They were Raleigh, North Carolina, Minnesota, Austin, Texas, Los Angeles, the Central Valley and Sacramento in California, and Seattle. The company increased incentives such as mortgage rate buydowns and lowered prices in some subdivisions to bolster demand. So I saw some comments and I saw a brief article about how new home sales were up. I believe it was week over week. It could have been month over month. And people are like, why did new home sales go up after they just plummeted? And the only thing I can think of, guys, it's probably because they're now starting to finish homes that they sold in 2021 or that they sold at the beginning of 2022. It could take 6 months to 12 months to finish a new build after it's under contract. So I see that increase in sales as the bottleneck just releasing, right? I don't think it's a demand increase thing. I think they're just catching up. It is what it is. Let's get back to this article right now. Home builders are facing rough seas ahead with mortgage rates that have soared at the fastest rate in more than 50 years of record keeping. According to data from Freddie Mac, the Federal Reserve, in its efforts to tamp down rampant inflation, is managing to cool the overheating housing market. And Lennar said it's well positioned to maintain its sales in many regions. Lennar's quarterly results were impressive and highlighted the company's execution and production oriented focus, which could support share gains in a declining market. Yet, while the shares may rise initially, investors may not be willing to underwrite any near term positives given the acknowledgement of slowing demand and less favorable pricing environments, which will likely see an increase in incentives that could also pressure outsized margins. So, let me ask you guys this. Do you think Lennar and its projections equated for a recession? Right? Comment below. I don't think a lot of these companies are preparing for a recession, which is shocking to me because we have huge economic factors and indicators that are spelling out recession, like the 2 and the 10 inversion, and it actually may invert yet again. Why aren't they equating in a recession into this? This is shocking to me, but it is what it is, you guys. We're going to have some buying incentives across the nation. They're going to come back. It is going to be great. Let's continue on with this article right now. Supply chain. One thing that may help builders is that challenges in getting materials appears to be easing. For Lennar, the time it took to build a house in the quarter increased only slightly sequentially, a sign that the supply chain issues that have plagued the industry have started to subside. Lennar and other builders will need to manage the effects rising interest rates will have on demand, and that may include having to drop prices to lure in buyers. And that's what I'm saying, you guys. They're going to lure in buyers as soon as the market shifts, and we're going to get crazy deals. Mark my words. The Fed's stated determination to curtail inflation through interest rate increases and quantitative tightening have begun to have the real desired effect of slowing sales in some markets and stalling price increases across the country, Miller said. While we believe that there remain a significant shortage of dwellings, and especially workforce housing in the United States, the relationship between price and interest rates is going through a balance. So, do you guys see how interest rates lead prices? Do you remember me saying that? Interest rates, sales and construction, prices, and then inventory. Interest rates lead all of those things. Even they're saying it. So, again, I say, why is everyone surprised what's happening? This isn't even doom and gloom. Doom and gloom is fake. This is the reality of what's happening, you guys. And I didn't make it. I want to do videos on the top 5 places to invest. I want to do videos on the top 5 best places to live, top 5 best school districts in Texas. That's the type of videos I want to do, but I'm stuck doing these types of videos because I can't buy real estate. And that's really the videos I want to do, but I refuse to do it when I don't believe in it, right? Y'all see my point here? But regardless, you guys, in conclusion, this is what I say. Keep your eyes on these new home builders and watch these buyers' incentives get out of control. So what I plan to do is I'm going to find a new build, more than likely, right? I'm going to adjust to the market and adjust to the data, but I'm going to look for a new home builder at a home that's under market value. They're going to pay all of my closing costs, give me new appliances, give me a warranty, and give me more realtor commission that I'm going to personally use as my down payment for a house. Mark my words on that. Keep your eyes on the new home builders. If you're out there and you're waiting like I am, congratulations. We're doing the right thing. Now, again, you guys, if you're out there also investing in real estate, you guys already know I wish you luck and I hope you win.